Are you feeling overwhelmed by the recent market fluctuations? You're not alone. With tariffs and recession fears causing wild market swings, investing can feel like a roller coaster ride. In uncertain times, focusing on diversified investments can help you weather the storm. So, how do you choose the best way to invest during times of volatility? The answer may not be as straightforward as you'd like, but one timeless piece of advice remains. Avoid trying to time the market. Instead, invest based on your personal goals, which should remain steady regardless of market changes. Now let's dive into the 11 best investments right now, arranged from lowest to highest risk. Remember, lower risk often means lower returns, and higher risk can bring better long-term returns. First up are high-yield savings accounts. While not an investment per se, these accounts offer higher rates than traditional banks. They're ideal for short-term savings like for emergencies or vacation funds. To get the best rates, explore online banks or even some brokerage firms. Next, consider certificates of deposit or CDs. These federally insured accounts lock in a fixed interest rate for a set period. CDs suit individuals who need their money at a specific future date, like a home down payment. Just remember, early withdrawal usually comes with penalties. The best rates are often found at online banks and credit unions. Moving on, government bonds provide a safe investment option. These loans to government entities pay interest over time and are backed by the government's credit. They're perfect for conservative investors seeking stability and lower volatility in their portfolios. Corporate bonds are similar but involve lending to companies instead. While riskier, they can yield higher returns than government bonds. Investors must balance the potential for higher yields with the risk of company bankruptcy. Next, we have money market funds. These investment products pool your money into short-term debts but are somewhat exposed to market risks. They're best for investors wanting to keep their cash safe while aiming for modest returns. Mutual funds offer a way to pool money and invest in diverse assets. They're ideal for individuals saving for retirement and wanting exposure to the stock market without managing multiple stocks themselves. You can find these through various financial institutions. Index funds aim to mirror the performance of market indices like the S&P 500. They're cost-effective due to lower management fees and suit long-term investors looking for solid returns without high volatility. Exchange-traded funds, or ETFs, are similar to mutual funds but trade like stocks. Ideal for those with a longer investment horizon, ETFs also suit investors who can't meet mutual fund minimums. Dividend stocks blend the income of bonds with the growth potential of stocks. They pay regular cash dividends, making them suitable for all investors, from beginners to retirees. Platforms like online brokers make purchasing them easy. Stocks represent ownership in companies and offer potentially high returns, but with increased volatility. They're best for investors who can tolerate risk. Finally, let's talk about gold. Gold's allure often increases during market instability, as it provides a hedge against fluctuations. While buying physical gold is an option, it's easier to invest in gold stocks or funds through online brokerage accounts. Are you ready to invest? If you don't have a brokerage account yet, now is the time to get started. Focus on options that align with your goals to navigate through today's volatile market.